mutual funds and its types. Okay, mutual funds and its types. So mutual funds and types of mutual funds, that's what I'm going to discuss in this video. Mutual funds and types of mutual funds. Say for example, let's say a person wants to invest into the share market directly through demat account. Let's say he wants to buy, let's say, Bajaj Auto, Tata Tech, or ICICI, or SBI Bank. So he can buy these shares directly from the stock exchange. But then, however, suppose, imagine he doesn't know how to buy and sell, he doesn't know when to buy and sell. Say for example, let's say he is coming with non-finance background, so no knowledge. So he has no knowledge about how to invest, or maybe he is coming from finance background but then no time, so he is already held up with his office work, so he has no time to invest, so he needs some help over there. Or let's say no research team to advise. So these are all the problems that one person might face in spite of having enough money to invest. Now there are so many people like this guy in the market who has some money to invest, but then they don't know how to invest. Okay, why they don't know how to invest? As in, they are facing all these issues: no knowledge, no time, no research team, all such things. So because of this reason, this money is not reaching the market. Now this is the problem. Now this problem is converted into an opportunity by some companies. They acted as an intermediary. So those intermediaries are nothing but mutual funds. Okay, so these intermediaries, they pooled money from such kind of people who don't want to directly buy and sell shares in the market. So these mutual funds pooled money from such investors, and on their behalf they pooled money and invested into various securities. So that's what mutual fund does. So through mutual funds, you are indirectly owning company shares. You can also own directly, nothing is stopping you, but then in case you don't want to, because of all these issues like knowledge, time, research, all that thing, if you don't have all these things, then indirectly you can own this company shares through mutual funds. Okay, so mutual funds is a collective investment scheme. Collective investment scheme. Collective investment scheme. So collective investment scheme. Okay, collective investment scheme. So as in the collective investment scheme, it is an investment scheme through which money is pooled from the common public. Money is pooled from the common public and invested into various securities. That's why collective investment scheme. Okay, money is pooled. Okay, now these mutual fund can be categorized into two types based on the structure. Based on the structure of the fund, it can be categorized into two types. One is open-ended fund. Open-ended fund. Another one is closed-ended fund. Open-ended fund and closed-ended fund. So open-ended fund means what? You can invest in this fund throughout the year. That's why it is called open-ended. Okay, open-ended. You can invest into this fund throughout the year. Okay, this is open-ended. Open-ended fund. Say for example, this fund is getting launched, let's say, and it is the new fund offer period. New fund offer period means similar to IPO only. Like IPO is the term we use in for companies issuing shares for the first time, whereas when a new fund is coming into the market, we use the term NFO, new fund offer. So imagine a new fund offer is coming into the market, let's say, you know uh, uh, 1st December to 15th December. So you can invest into this new fund offer. Let's say this is just an example I'm giving you here. You can invest into this new fund offer. Typically the price of one unit, okay, in a new fund offer will be rupees 10, which is called as NAV. NAV means price per unit. Okay, NAV stands for price per unit. That means net asset value. It means price per unit. Okay, how to calculate this net asset value, I will let you know that as well. In another video I will make, where I will speak about how to calculate net asset value. Net asset value means what? Price per unit only. Price per unit. Okay, so this video I'm sticking to what is mutual funds and its types. Okay, so price per unit is, let's say, 10 rupees, and during this new fund offer, when you invest, its price will be rupees 10. So imagine you are investing 10,000 rupees. So when you get 10,000 rupees, when you invest 10,000 rupees, you will get 1,000 units, because the price of one unit is 10. So you will get 1,000 units. Okay, and then imagine, there is Mr. X who invested like this, but then Mr. Y did not invest into it because that time he did not have money, or whatever reasons he was not interested, or whatever reasons he did not have money during this period from 1st December to 15th December. And then suddenly after a few months or years, he feels like investing into this fund. Can he invest? Yes, he can invest in open-ended fund anytime throughout the year. Okay, anytime throughout the year he can invest. The only thing is, when he is investing at that time, imagine he is investing after, let's say, after a year, he can still invest, but then by that time what will happen, the NAV will get changed. So that means the price of one unit at that time might be rupees 12. So if it is rupees 12, when he is investing, let's say whatever amount he is investing, he will be getting units based on 12. So if he is investing 10,000 rupees at that time, okay, so the price of one unit is 12. The price of one unit is 12, and so uh, for 10,000, how many units will he get? So he will get uh, 10,000 divided by 12. Okay, 10,000 divided by 12, let's see, that comes to 833.33 units. So, you will, Mr. Y will get this many units at that time, not 1,000 units which Mr. X got. So, Mr. Y will be getting 833 units. So, moral of the story, one person can invest into this open-ended fund throughout the year, but the number of units that he is going to get will depend upon the NAV at that time, will depend upon the NAV rate at that time. Okay, so this is how open-ended fund operates. Whereas for closed-ended fund, again, if it is, this fund is coming into the market, and let's say new fund offer, this is from 1st December, to, let's say, 25th December. So this is the new fund offer for this fund, and during this time, whoever is investing, they will get units. But however, once it crosses 25th December, one cannot invest in it. Okay, once it crosses 25th December, you will not be able to invest in it. So that's why it is called closed ended fund. It is closed. Okay, it is open only during new fund offer time. Okay, so here this fund pools money from the investors, and this closed ended fund will invest into various securities, and then you cannot invest in it once this new fund offer gets closed. And then at the time of maturity, what will happen is, they will sell all these securities, and then they will repay it back to the investors. Okay, at the time of maturity, they will sell all these securities and repay it back to the investors. That's how closed ended fund operates. But there are some closed ended funds, which may give you the exit route. So in between, typically there will be a lock-in period. Typically, 3 years or 5 years lock-in period will be there. But there are some funds, especially in US, there, some exit route will be there, like once or twice, like after a few years, they can give that exit route as well. Okay, that it will be certain dates will be specified, when if somebody wants to sell that units, they can sell.